So AMD stock just shot up again today. They've had a very up and down last few weeks as well as last few months. So I'm going to kind of do a deeper dive into what's going on lately and see if they are a buy, hold, or sell. One interesting bit of news, if you ever follow like some other bigger name investors like Cathie Wood has put a lot of money into AMD here on the 4th of February, buying the dip. Obviously, it's probably up pretty well right now, but we'll see if that actually lasts because, like I said, they can have these big days, and with the market the way it is, there are a lot of high and low days for any major stock, but over the last 3 months or so, they have been kind of not looking too good. In fact, if you look at their past 3 months, they are still down around 18%, even after having a spike of about 8% just in one day. Now, if we look at their quarterly financials, they're actually pretty good. Up 34.11% year over year is nothing to ignore here. That's very good. Earnings, they beat by 15.98%, 6.2% on revenue in their last earnings call, which is very good as well. But they do have this extremely high PE ratio. And again, their actual returns on the stock itself, on their stock price, has been slowing down dramatically over the past 3 months. So you're seeing some good signs and you're seeing some bad signs as well. They do not offer a dividend, so obviously you are buying AMD for maximum growth and you are betting on AI and their chips being in a huge demand over time. Now, over the past 5 years, they're still up 137%, which is pretty solid. Over the past year, they're still up 89%, which again is beating the S&P 500. So if you compare to the S&P 500, which is the gold standard, they're only up about 14% in the past year and 78% in the past 5 years. They're still pretty far off from their 52-week high, currently at 208 versus 267 as their 52-week high. Now their assets versus liabilities look really good at 76.93 billion in assets versus only 13.93 billion in liabilities. Their return on assets and their return on capital, they're like right around the okay margins. It's not a huge red flag or anything. I mean, normally with return on assets, you want at least like 5 to 10%. If you have return on capital as one of your indicators, usually you would look for like 8 to 15%. So they are a little bit low on return on capital and on return on assets. So we went over their forward PE ratio. Their trailing PE ratio, which you can find at Robinhood, is a 72.65. So both are pretty close. I mean, there's not really a huge gap in there. Sometimes there is every once in a while, but not today with AMD. You see some customers buying AMD, buying the dip the last few weeks. As far as hedge funds, pretty split, but they are buying more than selling. At least this was towards the end of 2025, so we do need to update this information to see what they're doing lately. But the last few quarters in Q2 and Q3 of 2025, they were buying more than selling at that time, but that was probably before they started seeing a pretty major dip, which was over the last 3 months. Insiders, doesn't really matter, but you can kind of see what they're doing. Not much of a trend here to look at. Now, analysts are still giving them a buy score of 81.4% out of 59 Wall Street analysts. So obviously a very good buy score if you're really paying attention to what analysts are saying. Hold 18.6%, sell 0%. So if you look at what analysts are doing, they seem to still be pretty bullish on AMD. They've done pretty well at meeting their estimates as well. If you look at their earnings, they've pretty much beat every single quarter for the most part over the last couple of years. If you look at their forecast 12-month PEG ratio, they have a 0.74, which is actually quite reasonable. There are some other factors that make it look not reasonable if you compare their earnings to their price and things like that. But if you go by growth and you factor that in, according to the NASDAQ PEG ratio, it's actually somewhat of a bargain. Now, if you look at their EV to EBITDA ratio, it's a little bit of a different story. They have a 42.35 EV to EBITDA, which seems kind of high. It's actually ranked worse than 68.46% of other semiconductor companies in the industry, which isn't the best, but it's not like you see it's yellow on both. It's not like a huge red flag. I do think they have strong leadership here, which is something I really value. And one way I like to look into leadership is what their employees say about working there. They are factored in as a best led company, which is a very rare tag that I see on Glassdoor. I hardly ever see that. They have a 4 out of 5 star rating overall. 83% recommend working here to a friend. 95% of employees approve of their CEO. That's one of the highest scores I've probably ever seen. This might be one of those examples of a great company that may not be the best stock to own long term or even short term. If you're looking at the AI competition, you could do a lot worse, but you might be able to do better as well. There's a lot of competition pressure, and they're always kind of in NVIDIA's shadow. So if you already have NVIDIA, I don't know if there's really any point in having AMD as well. Or maybe you want to diversify between the two, but a lot of times when AMD goes down, NVIDIA is also going down and vice versa. But a lot of times NVIDIA has better returns, and they have had better returns by far over the past few years. It seems like a lot of the reason that their stock has been down over the past 3 months or so is because even though they're doing well and they have some really positive numbers, people wanted to see that growth accelerate more instead of being steady. So this might be one of those unfair scenarios where you have a great company, but their stock is just not always going to exhibit how great they actually are. And some stocks outperform how great the company may actually be. It's just the way it works. So one other issue that I didn't mention yet is they have some concerns here as well over the sustainability of China-driven revenue. China in many areas is trying to actually replace American reliance on any sort of technology, as are many other countries, specifically when it comes to chips and AI, things like that. It seems like China is trying to rely less and less over time on American companies. So because some of the sales were unexpected from China, some people wonder if that's actually sustainable long term. So I actually have AMD as a hold, but it's also going to depend on the scenario you happen to be in. Obviously, I can't give you financial advice. I don't know what your portfolio is like. I don't know your tax situation. I don't know when you're hoping to collect on anything or sell for income purposes. But if you look at AMD like as a growth stock, which is what it is, you're not going to get any dividends out of them. For me, it came down to, do I already have other stocks that I like better for long-term growth in this sector? And I did. So I don't necessarily need AMD in my portfolio. Is it a good buy right now? You could make the argument that it is and follow what Cathie Wood is doing, although she does make some pretty bold decisions, I would say. She also just dumped a bunch of extra money into Tesla, which is kind of a scary thought to me. But her strategies, that's a subject for another video. I'm not going to go down that road right now. Do I think they're a great company? Yes, I do think they're a great company with great leadership, a great business model, really good earnings. But I just don't know if the public will believe in them as much as some of these other more like shiny tech stocks that are in similar industries, especially when it comes to AI and semiconductors, things like that. I would see them more as like a conservative stock to hold, or maybe like if you have other options like Google or Nvidia already, you could make the argument for selling right now. But just because they had a spike of 8%, or just because they're on a 3-month what you would call a dip, I'm not necessarily a believer in just, it's a great company, buy the dip. I don't know if that's always going to apply in a lot of scenarios. They just had a nice jump today. They're still in what you may call a dip. If someone believes in them, they're going to call it a dip, and they're going to want to buy the dip like Cathie Wood did. I'm not sure that's how I see them right now. And I would be pretty careful if I was in the position of wanting to buy AMD. Like, I probably wouldn't put my full, say, monthly budget of investing in it. I would maybe do like a conservative buy if I was going to buy. But right now I really wouldn't do that. I would be still more in wait and see mode. And I think there are better options out there in semiconductors and other AI stocks right now. Again, none of this is financial advice. It's going to really just depend on what you believe in them and your portfolio situation long term.